soil. A fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London, where it's just gone a couple of minutes past midday here, making it just gone 1100 UTC. Big shout out to everybody making the stream live today, as well as everybody watching this on recording as well. I hope everyone had a nice weekend and looking forward to a good week ahead. So, a big shout out to everybody. Some early ones in. Suleiman K in for the win. First one in today, followed shortly by Moral. Obviously, our lovely Erica, Craigie Boy as well. Hope work isn't getting in the way, mate. Hello, Ricky Garcia, Burned, and our friend Gio. Obviously, a big shout out to everybody as well who's tuning in. I know we've got a lot of people, several hundred or a couple of thousand normally coming in from Twitter as well. So a big hello to all of you. So I want to start with Bitcoin this morning. We're going to try and do a little bit of a shorter, punchier session this morning as well. Raphael, hello, my friend. And just to kind of see where we are overall, okay? So as shared with the kind of market reports, really on a weekly scale, when we look at the Bitcoin chart and we strip away the noise, it really doesn't look that bad, okay? So I know a lot of people have been saying recently about me being overly bearish, which is completely untrue. Look, everybody's got opinions on stuff, right? For me, it just makes sense when we engage with our previous all-time high over here and we started to see these rejection wicks, especially when we had this here, which, you know, to always have to think of the legend SZ when you hear this, right? But deviation, right? Price has stepped back in here with this candle, in which case, you know, why is it showing weakness there if it's really starting to get to rip? Now, this doesn't mean that the bull market's over. It doesn't mean that everything's going to go to zero. What it means is that very rarely do trends or any kind of established move, just we're not on an up only or down only process, right? At the end of the day, what we've got here is we can see after this last impulse move up, we had a lot of bullish price action take place only over the course of kind of 5-6 weeks here. It's natural for price to want to cool off, and that's why for several weeks now, we've been looking for price to have this corrective move lower to come and fill these inefficiencies, okay, these fair value gaps. Nit, hello, mate. Fashionably late indeed. Now, when we dipped into this here, yeah, so not last week, the week before, we had this really nice kind of pin bar candle form where we saw this nice long downside wick. What was good about this is we managed to clear out some liquidity, obviously, as we can see below these lows here. And price has rebalanced marginally this fair value gap. Oh God, I hope it isn't back knit, but please do let me know if it is. So we've rebalanced this fair value gap. Now what we're looking for is for price to kind of build some momentum and get back towards the high. If we're looking at the principle that price has taken external liquidity here, the expectation is for it to reach internal liquidity, all right? And then from internal, we expect price to attack external again, external being in the form of these highs. However, something that we do want to be aware of here, okay, which we'll look at, is first of all on a weekly scale. If we look at this expansion here, and then we get our Fibonacci out, then one thing I like about this on a weekly scale, looking for a slightly deeper corrective move here, is the fact that looking at our laws of premium and discount in terms of the way that we look for price, you know, when it establishes a move like this establishes our range, and we look for internal liquidity to be found below the 50%, which is this line here. Now, if we use our golden pocket as well, which is a Fibonacci ratio, we can see that this very small weekly order block lines up with this here. So a deeper corrective move into this wouldn't surprise me. In fact, if we did have a real kind of bullish resurgence from here, and we're going to look at risk markets in a minute as well and DXY, then, I think this would be really, really strong from Bitcoin. I would actually, expectation was to see price kind of come down into this area, maybe kind of wick down into the golden pocket here before having kind of quite a sharp V-shaped recovery. Now, obviously, if we started coming down here and closing below this, then, we would be looking for price to kind of reach a bit lower. Seb, hello, mate. It was good to see you as well. Blockchain conference in London next week. Yeah, I'm going to see if I'm around for that. So I don't know if anybody else is planning to attend that as well, but do try and get to as many that I can in and around London and Europe. God, Gio and Eric, I do hope you're wrong about those bleeps because I can't hear them. So maybe I just kind of program them over. So that's it. On a weekly scale, I think that's where we are at the moment. But we need to also be... Can't even talk today. We need to also ask ourselves, or I always ask myself, where's price currently delivering from? Because this current state of delivery, we can see that even though we had a bearish week last week, it's also worthy of noting that we have a bearish engulfing candle here. I think it was Erica as well who mentioned that when we shared these yesterday, that if the candle closes like this, it's a bearish engulfing. So that is something that, we shouldn't ignore. Typically, when we see these kind of engulfing candles, right? And look, we're talking on a weekly scale at the moment, so I'm going to give you some examples. But for me, I consider an engulfing candle when we have one where the body closes above here, the body of the previous candle. So for me, this is an engulfing candle. Even if your rules were that it needed to close above the wick, it is still an engulfing candle as well. Now, people might say, well, that's not really bullish price action there, is it? But it is, because what we've done is when we set that engulfing candle, our expectation is that the following week is going to hunt liquidity above that week's high. So that's what it did. Bullish engulfing candle. Our expectation is for price to come up. Even though this closed bearish, we can see liquidity of the prior week's high was attacked. Now, we had the same thing here. With this closing here, it formed a bearish engulfing candle and changed our state of delivery. So what's our expectation here? Well, that price is going to chase down the lows on here. All right. Now, obviously, we didn't leave any wick lows, but what we can see is price came to take the next liquidity, which was from the week previous. All right. So with that in mind, that's something that we want to take into account. However, we don't really have tons of data on here to suggest. All right. Now, for me, while we're delivering from a bullish fair value gap, then we want to be looking for bullish trades. However, we don't really have a clear read on this because, look, overall, the weekly is still incredibly bullish, right? We haven't quite corrected down below 50% though. However, what I would say is that we obviously don't always have to. All right. Now, if we were taking this expansion leg here, for example, okay, we can see here that price only actually came down to this fair value gap here, right? So it took the nearest one, and look, that was away from the 50% as well. So it doesn't always have to play out like that, but quite often we do see price return to that 50% level before it starts to get the buyer step in and then move higher. So what we're going to do now is we're going to move on to a daily. All right, and just on a weekly scale, I'm going to leave the all-time high on there, all right, but I am just going to hide the rest of these bits and pieces here so that we've got it a little bit cleaner. Okay, so now as we put on our kind of daily points of interest here, let me just zoom in. Right, something that's of interest here is, again, we look at the weekly and we say we're delivering from a bullish fair value gap. All right. Sorry, Seb, I didn't see your question. Is price retraced to 50% on balance on the daily time frame? Yeah, here we go. Exactly right. So that's what we're looking at now, and a very good question. So as we see it here, however, we can see how price has retraced to 50% here, found the bullish fair value gap, right? Now, look, the difference is we had, with this retracement happened obviously into last week, right? So we were looking at this on Wednesday, price came back down, rebalances, and then we got this kind of move higher. Now, price then corrected back lower again on the Friday. So, we were dealing with earnings last week. We had unemployment job numbers came in from America that kind of skewed the equity markets a little bit as well. And we saw a fairly strong resurgence in the dollar. So what we need to think about in regards to that is that if the risk markets are taking a bit of a hit, then crypto is almost always going to follow. It doesn't always have to follow that narrative, but typically it does. So looking at it today, we can see that the dollar index is down and equity markets are up, right? So creating a good environment for risk assets, okay? So risk assets being your S&P 500, your NASDAQ, your technology stocks, and obviously your cryptocurrencies, okay? So as we look at this here, then quite simply, we're just outlining the play on where we think that, price is going to go next. Again, we're delivering from a bullish gap here, meaning that we favor price action to move higher. What I do quite like about this, we've already swept this high, right? This previous high here, but they do pretty much make relative equal highs. I don't like labeling them as relative equal highs when the liquidity from this candle, the front candle here, has swept the previous one. I prefer that to be slightly higher, leaving this as a failure swing, meaning that there's even more liquidity to potentially grab. However, as we kind of draw it out like this, we can see where we are at the moment, right? Price came up, took external liquidity here from these highs, then price had this nice, from this high, created this high here, and then moved down to internal liquidity within this fair value gap. Now, within here, we've seen this and we've got the bullish kind of momentum with the current market open. So the next point that we're aiming for here is the current swing high, all right, which is sat at 63,450. And it's funny, especially with cryptocurrency, you see how these numbers are often quite round numbers as well, right? Which kind of taps you into the psychology of the players in the market. Loretto Jr., hello, mate. So looking at this, what can we take from this? Well, we've got our liquidity targets lower down. We've got them above. I'd need to see a daily close below this fair value gap here, right? Before I would consider shorting into here. This is down at 56,697. While we hold this bullish fair value gap, I'm going to use the 4 hour to refine this a little bit more, okay? So what I put out in the report last night, and we've had it this morning, was that if we close above this balanced price range here, so balanced price range, as you see this bullish fair value gap here, is closed through with a bearish fair value gap. That makes this slither of the adjoining or overlapping fair value gap our balanced price range. We can see how it acts as strong resistance here, 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 here. So the play was, if we continue to hold below this, we expect price to come down and seek liquidity lower below these lows. Right, so low resistance liquidity here, which is an ICT concept. And the idea of this, and not just an ICT concept, is quite simply untapped lows, right? Untapped low, untapped low, untapped low. It makes great liquidity pools for price to come down and flush. Ultimately, the market's open this morning and closed above, in which case we explained that our playbook is to target this high. Okay, that's because even though we've got this big bearish fair value gap here, if price was really rebalancing this, right, as we normally see with fair value gaps, for example, this one here. So to show you an example, what happens is price drives into this, and look how quickly, 1, 2, 3 candles, it gets that momentum and starts to move higher. What you don't see very often is price coming and meandering around, right? So that's a good British term for you there. So meandering just means that price doesn't very much hang about in these. You either see a good rejection, or like this, you see price quite quickly cut through them. When they cut through them, right, they become fair value gap inversions. These go purple on our chart. And then when we close above them here, we expect them to then attack liquidity higher up. So that's the theory that we've got at the moment, right? That while price is kind of invalidated this, strong close above here, the expectation is for price to reach up and take liquidity above here, all right? Now, it's key that we hold this area, and what we want to see on a 4 hour scale is a close above this fair value gap, making this an inversion fair value gap, and ultimately changing this area, hopefully, to an area of support so that Bitcoin can start making progress and start attacking these highs up here, around about 64.3 there, and ultimately this one here at 65. Quick question here from Peter Dell. It really looks like the altcoin highs won't happen until next year. Yeah, it's tricky. It's not really my area of expertise with that, to be honest. I have a wonderful team that work around me that kind of deal more on that side. I typically look at these things from more of a price action point of view, especially more of an intraday basis. I really kind of try and frame these for people so that we can look at setups for maybe kind of like swing trades and stuff like that. So I appreciate not a lot of people can get here on an intraday basis. But yeah, I mean, look, what you want to see from Bitcoin really is to have that cooling off period. We want it to get back into kind of more of a bullish structure. Yeah. And then from there, you want to see those periods of consolidation, which is where the altcoins really start to kind of pop off. Personally, and this is just me, not advising anyone else for this, I've still been accumulating on these dips for projects that I have, great interest in. I've got a brilliant fundamental team who make me aware of these projects as well as obviously some really good kind of friends in the industry you build over the years. So I rely on their expertise more for how the projects are made from a fundamental standpoint, but then I use the technicals to find kind of good areas to get into. So I don't, I'm not 100%, but I don't really know. Market conditions are a little bit skewed at the moment, but I would be surprised if this is, the end of the bullish conditions. Often after these, what seem like big purges, it allows bigger institutional players to get involved at a lower price, and then we can really see this start to rip. What I would always suggest, though, is if you're looking at this from a technical standpoint, is, make sure that you're entering at points that you've got some validation. So for me, well, we've closed above this today. Great. I'm now bullish into this high. However, if we break down and invalidate this, and we start to break back down, then I'm not going to hesitate to switch my bias to short and start targeting these lows. Doesn't mean that I think crypto is going to zero, but it does mean that I like to kind of trade it both ways. But a very, very good point, Peter. I think a lot of people have that kind of opinion, but I think we'll probably find out fairly soon enough as the markets start to settle. We've had a lot of the red folder news now out in terms of the FOMC decisions. Rate cuts, obviously they've kind of stuck, as the UK have as well, with where it currently sits. So we'll have to kind of see how the CPI, PPI prints and that come out. But without that kind of injected volatility, as long as we've got risk on conditions with traditional markets, I think we'll still see some decent upside from cryptocurrency. Okay, Loretta, really good question. So if you just type on your keyboard, let me just show you like this one, right? 1 day, 1D, switch you to a daily, 1W, switch you to a W, and then anything with an H, take you to the hourly. And then the same with minutes. If you just type in, I think, you don't even need to put M after it, so just 15, and then it takes you straight down to the minutes as well. All right, bud. There you go, Nip. There you go, mate. Brilliant. So Phil, I have a policy and strategy each month. I'm investing about $50 in each of my 20 coins for the next 6 months. Nice. Okay, brilliant. Yeah, I think makes sense. I think the key thing there is understanding what your risk is. Don't risk any money that you're not willing to lose on any investment. Doesn't matter if it's the S&P 500, stocks, Tesla, cryptocurrency, right? It's just, a more volatile asset, potential for more upside, but obviously potential comes weighed with more downside as well. You're very, very welcome. Okay, guys. So, I think that's where I am with that. Let's switch over and take a look at ETH, shall we? Let's take a look where we are with ETH. Let's clean this up over here for a minute and start with a nice fresh chart. Perfect. So on a weekly scale, obviously, we're looking at something fairly similar to as we've seen with Bitcoin here as well. All right. We've come back down into this weekly gap here. We had a little bit of momentum. We then come back down and revisited this gap here, kind of taking out liquidity. Again, for me, this does look a little bit weak. All right. We can see we had this, as we were talking about before, the engulfing candle that was here. This also turned into a bearish order block, right? So for the previous weeks, why we had that bearish bias on ETH. While price is kind of getting forced back down to these lows, I have to say then, this swing low is obviously a key point of interest, which is sat down here at 2815. And then as we've kind of gone down into this for me is looking like it's still the draw on liquidity lower. We have taken the prior week's low, okay, which can't be ignored. So we'll take a look at that. But ultimately, when we react from these fair value gaps, you do want to kind of see that momentum build. But this could have been momentum building to here, right? So we had the impulse up, we had our nice 50% correction just over. We then started to get this impulse move to here, remembering that actually when we look at this, if this is news generated or if this is to do with anything other than obviously technical standpoints, then this could have caused this temporary weakness. So while price is down here, the more we show strength, the more likelihood is that we go higher. In fact, we've got this high here and this high here. But I do also think that, showing weakness at this point could lead to us having a deeper purge into this, possibly even down towards this kind of order block here, which sits in around 2461. All right. So let's take a look at this on the daily. Here we go. So we can see we came underneath this order block. Look how price came back up to retest this area. This is obviously on the weekly time frame. But we can also see, and I'll just pop this on here. All right, and do it like that. So you can see this is an order block. Yeah, or a area of supply. Price came down into this. This is the daily version here. These are joining candles. Came back into this, found resistance here, and has ultimately sold off to the lows. So using the same principles to kind of overlay this, we can see that this here at the moment is what's kind of suppressing price, right? So we can see that as this one is on a weekly scale, we have this one on a daily scale. Yeah, price has come up, set this bearish order block here, and now price is kind of coming back up into this area here. So is this an area of rejection? Price has come down, swept that low. Now it's coming back up to here. I think if we start violating and closing above this order block here, yeah, then I would expect price to continue higher towards this high and a retest of this weekly order block. However, whilst we're in here, yeah, and we'll look at this close from the 4 hour, for me, it still kind of favors more downside here because we've taken liquidity from this low. We're now drawing back up into this bearish order block. So if we look at it on the 4 hour, yeah, we can see it even clearer here, how we have this big bearish FVG, very, very similar to how we have it with Bitcoin. So FVG H4 to show this is our 4 hour. Now, while price is in here, right, then for me, it becomes interesting, right? We have a similar situation with Bitcoin in the fact that we've got this balanced price range over here, right? So we're coming into this, but price still needs to close above this here. You'd see these in kind of a lighter purple on my charts, right? So we still want to see more conviction from price here. While it's still in here and it's drawing into all of these kind of bearish points of interest, then, obviously we have to kind of favor short setups here. And in terms of how that would look like, the risk that we've got at the moment shorting into this is we've had this big impulse move higher. We can look for kind of a 50% retracement of this. But ultimately, we're still delivering from a bullish gap at the moment. The issue that you have when you have a lot of gaps around like this is a failure in order pairing, right? So these inefficiencies are obviously quite often filled by the market. They also provide a draw on liquidity, okay? So at the moment, the safest place for me here, while I'm looking at this chart, I'm saying, okay, well, we've got a clear and obvious gap above us here. We've got nothing really on the hourly. So we would need to focus in, or I would certainly want to focus in on these two gaps here, which while they sit above price can be a really excellent point to look for a short lower, back down below this 50%, maybe towards the golden pocket. But if price closes above this here, then I think we make an attack on this high, and then we actually look to move a bit higher as well. Hey, Tammy, how are you doing? Right, something else that I want to pop on here as well is just to use our B Pro and just see what that's telling us at the moment as well. Okay, so excuse me. So as we can see here, the B Pro trailer, right? So obviously when it's bullish, it's light grey and is underneath price. We can see how this very, very smartly flipped us here on Saturday, the 16th of March, yeah, into a higher time frame bearish bias on a daily basis. Okay, so while we're still underneath this on a daily basis, we need to still consider this bearish. If we're looking at this on a 4 hour, we can see that price is now coming up to test into this trailer here. So if we get a flip of this trailer, right, which often happens as well as we get a close above and an inversion of these fair value gaps, then we can kind of look to start making an attack on these highs. Because what I do like here is we can see that we've got a nice lot of liquidity starting to stack above these highs, which obviously makes these really nice targets for low resistance liquidity, right? For price to run up and purge these. So that's kind of where we are at the moment. I don't know if anybody has any particular tickers that they would like me to take a look at. I'm just going to have a quick look with you guys over the equity markets as well as the DXY too. Please do a chart. So what, just to add Bitcoin to this one? For example, was that what you were on about? Sorry, Peter. Oh, PAAL. Yeah, let's take a look at PAAL, shall we? I haven't heard of Polymesh, but let's take a look at PAAL, shall we? Oh, no. And okay, we'll take a look at PAAL and RNDR, all right? They're the only ones we're going to look at today, guys. Obviously, we'll be back on Wednesday for our Alt Request Wednesday, so do pop on. You can have a look there as well. Just looking back at a couple of questions here, just in case they're useful for anyone else as well. Yeah, and this was the reason for getting this chart, right? Peter was just making a point here that BTC has outperformed ETH. Yeah, and ETH has been a little bit flat. We've seen these kind of big pumps on BTC and stuff, right? So remembering that once BTC starts to suck the money out of the market, until it starts to consolidate and people start to allocate that to higher risk portions of their portfolios or investment strategies, then what you typically see is BTC outperforming. You know, sometimes you want that lagging effect from ETH. The more it compresses, the more it kind of sits behind. When we get that consolidation on Bitcoin, then you can really, really start to see those larger pumps. All right. So let me just flick B Pro off for a second and just take a look what else we've got here. Question: if you were to sell crypto for just holding under 1 year, will the tax on capital gains be more than if we held those crypto? You'll need to check that with your accountant, Peter. So it depends what country you're in, jurisdictions. Also, as well, I wouldn't want to advise you on that. You have to use a professional. I'm very, very selective over the accountants that I use for this because there's still quite a lot of grey area when it comes to the UK, but there's some really exceptional ones out there. But I would definitely ask for somebody that's got some experience dealing with this because it can save you or cost you a lot of money if you kind of get it wrong. Right, okay, perfect. So let's take a look. Let's start with, since Ricky was first name with RNDR, and then we will take a look at PAAL as well quickly before we finish up. So RNDR, what have we got here? So this is what we were looking at previously on this asset. We can see how this has kind of been grinding its way up quite nicely. Let's just really zoom out, see where we are. In fact, let's just hide this or create a group so we can open this again later and start with a nice fresh chart. So this was a tricky one here on RNDR, and I think I remember covering this before. Now, normally when you see these inversions, all right, so expectation was for support, especially when we got this beautiful long downside wick here and reclaimed this area. My expectation was for price to pump from here. Price then kind of ground down slowly. When we closed below this, yeah, then, like I said, remember, as I said previously, we've created a bearish engulfing candle. We've changed our state of delivery. Our expectation is to go for the prior low, okay? However, closing below this, I expected a deeper correction, maybe to here or even down to here, right? Hey, Crypto Niz, my friend, how you doing, brother? Any of you guys that don't know, Niz has got an awesome little presence on Twitter as well. Really, really good little trader. The bullish on RNDR chart and FA looking beautiful, good. And Niz has got a really, really good handle on the FA side. So, you know, to kind of back that up, just saying Niz here that basically we had this kind of purge down here. When we closed below here, the expectation for me was for price to seek out liquidity lower down. Now, we had this really strong reaction at this low here, right, which was the prior week's low. Then when we climb back above, we changed state of delivery here, setting this bullish order block. So again, now what we're looking for here is the next liquidity pool to be attacked, which is just slightly higher up, all right? So I'm bullish here on RNDR as well. I think this is a really strong reclaim. Basically, before these are inverted, means close below, we expect them to offer support. When they're closed below, we expect them to offer resistance. So when price very quickly recovers and gets back in here, then you're looking at this to be really kind of an area of decent support moving forward. On a kind of intraday basis, I'm looking at targets above the prior week's high, all right, which we've highlighted here. Moving this down onto a daily scale, again, we can kind of see how healthy this is and how even on this move higher here, we can see how price is really holding this nice gap, all right? Now, we love this downside wick. It just shows that market's been purged to the lows and now it can start making a move towards the highs. Combining that with the fact that we've got a nice kind of DXY is continuing to drop, equity markets are continuing to go up. We've got a nice kind of risk on basis to look at. I think this is looking quite attractive here. We also just kind of tickled in, I think, to this pop this on here as an order block. Yeah, this daily order block just tweaked it a little bit. Now with this recovery, this is looking really nice and bullish. Any kind of close like this, if we don't come and take out these highs today, we'll close this as a very bullish kind of pin bar candle or a bullish hammer candle, okay? So just looking at this down now on the 4 hour, we can see our price just swept into that. That's a really, really kind of beautiful recovery there. And now we're really showing a nice lot of bullish momentum. For me, we've got this high here, all right, which is just currently capping price. We want to see price get a close above this. This is on the 4 hour now. Then we've got this kind of intermediate high here. I'm not really too concerned about that because, look, thinking of this in terms of positional plays, I don't think as many people are going to have stop losses here as they are here, right? So the market will typically try and hunt down the biggest pool of liquidity, which is sitting above these relative equal highs here at $11.58, all right? So looking at it like that, I think it's looking really nice. Looking at how we can take our kind of intraday setups into here, we can see how price has kind of just been getting these rejections. We've just had a small close above it. Now, remembering this is a higher time frame level, yeah? So we need to make sure that we're seeing the close there. But at the moment, it looks like it's building this momentum nicely towards our kind of initial target of $11.31. So that looks good at the moment. Would I get involved here? I think it's still probably a little bit risky. I'd want to see how price plays out coming into the New York Open, which is in about an hour's time, or the pre-market, and then wait for that kind of little dip back, look for these kind of order blocks to be respected and see, for example, something like this, if we get any kind of reaction down here. Because look, unless we were trading this in London, which would have absolutely been the trade, by the way, and how you could have played that, by the way, looking at this time frame, look how we had this inversion on the 15-minute. Price closed above it here, giving us the bullish intent. We knew we had this higher time frame target resting here. We would have been looking for our long setups within here, within this bullish gap, right? So on the lower time frames from here. So at the moment, it's fine. I completely agree with Niz. This thing is looking really nice and bullish. But at the moment, I'd probably wait for a little corrective move towards New York, just in case when the market's open over there, there's a little bit of more of a risk-off sentiment. I don't think there's any particular reason for it to be, but you know, just we want to be aware for that, for trading it both ways. So let's just have a look at one more quickly, and then we're going to look to wrap this up. So we're going to look at PAAL. Let's have a look what we've got this on. Let's take a look at Gate. Right, so again, get ourselves a nice clean chart. Okay, so PAAL's a really interesting one here, actually, because on a weekly basis, right, we can see how this gap has been drawing price higher. All right, this fair value gap. So again, what's price done? We've swept liquidity from the lows down here. All right. Hey, good morning, Joshua, my friend. How are you? You're very welcome, Ricky. So we've taken liquidity from the lows and we're now rebalancing this, right? So we've gone, again, as we look at this, from our external liquidity back to internal liquidity here. Now, we've obviously seen a fairly strong rejection here, right, at the weekly FVG, which is fine. That does mean, though, that technically, if we're rejecting from here, that the next kind of draw on liquidity would be the prior swing low, which is down here at 0.27600. Now, that obviously doesn't mean that we have to come and take that out. We need to remember this is on a weekly scale as well, guys, all right? What I do like about this reaction here, however, is that we reacted really, really nicely at this bullish fair value gap, all right? We can see just down here how price just tickled into this area and had a really, really strong reaction. So price is kind of almost ranging at the moment between these two gaps. So let's take a look on the daily. Let's have a look what we've got here. So on the daily scale, we can see the rejections here. But again, as we kind of find it, we're still reacting from this bullish gap here. Price is holding. We've swept this low, yeah, which I really like. So we've induced, we've taken some liquidity. These lows that sit within fair value gaps are really, really great liquidity pools, all right? So this looks to be holding this area at the moment. For me, this is really, really simple, actually. So these are relative equal lows down here. Right, not exactly equal, but they're relative. which makes them a really, really good liquidity pool. So my play is this. We hold this currently, then I'm just looking for longs back to this fair value gap and then into these highs. All right, again, you've kind of got relative equal highs here, and these are really beautiful because remember what I said to you when we were looking at them on the other chart is that what you want from these is for them to either be dead level, right? And I think these might be, or for this to just be under. You don't want to see this one swept that, then I would just focus on the swing high. So we've got two really, really clear and obvious liquidity pools here. As long as we hold this bullish fair value gap, I'm looking for longs up into these. Obviously aware of this high time frame bearish gap above, but this still gives us plenty of room to trade, which we'll look at in a minute on the 4 hour. We close below this on the daily scale, then I'm targeting shorts into the equal lows down here at 0.31330. So let's get a little bit more context on the 4 hour and say, okay, well, how do we put that into a play? Well, quite simply for me, we've got this, and it is quite a skinny gap, right? No question about that, but it is currently suppressing price, yeah? So that is what's capping the market here. Price has drawn back up into this bearish order block, into this gap, and is currently rejecting. What we want to see from here is we want to see price close above this on a 4 hour scale, show us that this liquidity sweep here, you know, is the inducement we're looking for price to come and, you know, break structure and start getting back into a bullish form and start taking down some of these targets. We've got another set of equal highs above us here, showing that there's plenty of liquidity to draw price higher. But until we kind of come over this 4 hour here, I would say that it's probably a little bit treacherous. However, we know where this is now, and we know that that's been rebalanced, right? It hasn't been closed above, so it hasn't been violated, but we know that that wick there is going to provide a good liquidity pool. So if we want to look at ways that we can get involved a little bit more aggressively, then what we would probably want to look at here is to have a situation where price comes down a little bit lower. What I like about price correcting deeper at the moment is we've got this low resistance liquidity here. So how I'm looking at this as an intraday trader is I'm saying to myself, okay, if we go back to the 4 hour quickly, right, and then we look at the recent price leg from low to high here, yeah, we can see price is down below the 50% of this price leg down here. So from here, we're still kind of favoring long setups. However, on an intraday basis, this is looking like providing a really, really good liquidity pool. So if we're looking to go long here, I think the best play would be to see price come down, purge out some of this liquidity. Look, again, if we start closing below this, or we start really kind of not seeing a reaction here, then we can be pretty confident the price is looking to correct a bit deeper. But as it does at the moment, this could be the springboard that price needs to really kind of kick on. In terms of what I would be looking for down here in terms of the setup is in this move down, yeah, you want to see this take out liquidity. Now, what we're then looking for is for one of these lows to be engaged with, right? And then when the low is set, so we use this as the example low, we want to see price sweep liquidity here. Then we want to see it close above the high that swept the low. And then we either want to see a little pullback here and a move higher. Now, there's a lot of different trigger mechanisms and bits and pieces you can get, but the idea around this is that we've seen inducement. So we've seen price sweep some form of liquidity on the lows, right? Then from there, we're saying, well, okay, if price is still due to go down, then this high should remain intact, right? That shouldn't be violated. When that high is violated, you want to look at how price violates that high, yeah? So that basically you want to see a lot of energy in this move higher. Then you can either simply extend that line across and use that kind of area as your entry. Okay, it's a nice, clean, simple way to kind of look for those type processes. Just to give you an example on the charts from here, you can see if we look at the shorts that were happening up here, look, here's the high, there's the low, see that remained intact, swept a higher but didn't take the low, swept a high, didn't take the low, right? The difference in the one where we got our trigger mechanism is we swept these highs, relative equal highs again, by the way, just to kind of point that out. Swept that high. Where's the low that swept the high is here, right? That's the low that swept the high. That's what I would call a breaker line, yeah? And also, as well, remember these down close candles before price sweeps that high becomes our breaker block. When price closes below it here, which we can see, we get the close, we can set our limit order on this line, wait for price to return to that. We can then put our stop above the swing high, or you've got the swing high here and here as well. Remember, what we're saying to ourselves here is if this is the breaker block, we wouldn't expect price to come back within this. So you could put your stop above there, or you could put it above here, which is the order block. Yeah, this up close candle that's confirmed when this closes below. And then, you know, even if we're not really confident on the bias, we can look for things again. You know, I know I sound like a broken record, like equal lows, right? They're really good engineered pockets of liquidity, equal highs down to equal lows. Doesn't get much cleaner than that. When you get down to an initial target like that, this one here, for example, is 1.48. You can move your stop loss to entry. You can take some off the trade. And then you can simply hold these, right, until you get a structure break in the other direction. So to give you a long example, right, what did we do here? Price came down and swept some liquidity, right? Now, where's the high that swept the low? The problem that we've got over here is that we can see the high is way back over here, all right? So then what you're looking for in here is you're saying, okay, you look for an area of mitigation. We have this up close candle here. That should be offering some form of support, yeah? That should be offering resistance. So when we then close above it and we show weakness there, we can then look to areas in here where we can be a buyer. And this kind of area of the order block here would have been a really nice place to kind of get involved in this. However, at the moment, what we're looking at is price continuing to break down from here, okay? So what we want to see down here is this pattern, a reverse of what we saw up here, but when price comes in and purges these lows and then starts to make a move on the highs above, all right? Now, we're going to finish up here, guys, but I don't want to do so without, first of all, looking at the DXY today. We've got a little bit of weakness here in the dollar. That normally portrays really well, or portrays, not nonsense. It normally reflects well for risk markets, right? We'll look at this on the lower time frame, but we can see here price purged out. We had this reaction here at the golden pocket. Price came back up. We saw this resurgence, right? We saw this resurgence last week, which gave us a little bit of weakness towards crypto, all right, and other risk assets. But then we started to see this drop back down now. Now, one of the key things here, not to kind of swamp this chart out with too much stuff, is that we are holding this bullish daily fair value gap, which I'll do in green just so it gives some extra confluence. So daily close below that, and hopefully we'll see some more downturn for the dollar index, meaning better news for risk assets. But popping this on the 4 hour, which we've got here, let me just get rid of this. Quite simply, we can see how price ran out these highs, yeah, and then we set this bearish FVG here. I'll just do it in red just to really signify it's bearish. Price has now reacted off of this, so our expectation is that it will start seeking liquidity below these lows. Okay, so while this is weak, it's good news for risk assets. To take a quick look at our equity markets, right? So for me, as I've said kind of yesterday and this week, this is our current target up here, 18,350.75. We can see we've started today making some nice kind of grounds towards that. Again, last week, we simply held this nice bullish FVG. So while we had this purge down to here, we took some liquidity, we held this area, henceforth why we want to retain and remain a little bit bullish here, all right? But the draw for me on liquidity is still higher here, so I am holding a bullish bias. If I was to look at this on the hourly scale, we can also see that we had this nice change in state of delivery here in London and this nice clean failure swing just below this high time frame level. So bullish on equity markets this morning and crypto, but do keep an eye on DXY, which could be coming into support or some form lower down. All right, guys. So a really big thank you. Willie is hello, mate. I didn't see you sneak in there. Peter, Craigie boy, Seb, Ricky, Niz, brilliant to see you on here, mate. Josh Walker as well. Sam, I'm really sorry I missed your comment there, mate, about Doge. Doge looks good. 12-hour swing failure pattern, 12-hour range retracement into a 12-hour breaker area. That does sound very positive. Let's see where we are if you're around on Wednesday, mate, and we'll take a look at that on our Alt Request Wednesday show. All right. Obviously, Nick, Tammy, Loretto Jr., Erica, obviously wonderful Nick. Who else do we have in here as well? I think I've already mentioned Seb, but obviously Gio as well, Raphael, Bernd, who was on here earlier too, Suleiman K, Moral, everybody that's kind of tuned in for this. Apologies if I've missed your name, just having a quick read through the chat. Have a really great week ahead. Do keep an eye on the economic calendar. All right, we don't have any red folder news today. That's not out of New Zealand, I believe. But do keep a look at that moving forward. And if you're around, come and join us on Wednesday. If you've got some alt requests, do come and take a look. If you're interested in trading with us and getting exclusive content information, you can find the links in the descriptions below through Femex, where we post original content every day. And if you're interested in any of the memberships, you can check out. They start from free. All right, guys. So we're a trading, education-based trading group. And if not, look, we've got loads of free content out there. You're welcome to come and join these live streams on a Monday and a Wednesday, and keep an eye on our Twitter as well. And we've got some great free information in our infographics over on the website. All right, guys. So look, have a fantastic start to the week. Please do trade carefully. Don't risk any more money than you are willing to lose. All right. Just wishing you all a fantastic start of week. And I look forward to seeing you all back here on Wednesday.